Good evening, everyone. Today is Sunday, the 30th of April. It is currently 18:24 my time. I hope you guys had a great weekend and are ready for the week that is coming ahead. All right, so today I want to go through something with you guys. We are wanting to go through chapter 2, which is support and resistance. All right. So I'm going to teach you how to draw your support. I'm going to teach you how to draw your resistance. I'm going to teach you how to draw your zones and what zones are used for, and when you can trade zones and when you cannot trade your zones. All right. So let's get straight into it. So when we talk about support, have an image in your head of the floor. All right. We all know that the floor is the lower surface of a room. When we bring this into trading, we refer to support as an area where price appears to stop and reverse in the opposite direction for buys, or an area where price plays around for some time without breaking below. That is what support is. When we talk about a resistance, have an image in your head of a ceiling. We all know that the ceiling compared to the floor is the upper interior surface of a room. When we bring this into trading, we refer to resistance as the area where price appears to stop when buying and reverses in the opposite direction for sells, or a place where price will play around for some time before breaking above. All right. So with both support and resistance, a key thing to note is that both are only valid after two or more touches. An area that has touched multiple times at once can be regarded as one touch, depending on the time frame that you are looking at. So let's say this was the 1 minute time frame. We would see this as one touch, all right, on like a 5 minute or 15 minutes time frame. Okay, because how many candlesticks do you have here? You've got 1, 2, 3, 4, 5. So on a 5 minute time frame, you would actually see this as one touch. All right, I hope that makes a bit of sense. Okay, so we have a resistance here, which is the roof. Notice that I drew the close of candles. These close of these candles here, that was my resistance over there. And then my floor, I used these close of candles as my support line. All right. 2.2. I described zones as an area of sensitivity. This is an area where I expect the market to react. Okay. When we use zones in the market, we are catering for both support lines and wick lines. All right. So when I say support lines, I mean close of candle lines and your wick lines. So in simpler terms, close of candle support line plus your wick line equals zone. Close of candle resistance line, wick resistance line equals zone. So your two separate lines can be drawn as a zone. If you have the first line here that's catering for the close of candles, and then your second line is going to have the most touches on the wicks, and that is going to create your zone. All right. So let's take a look at some examples below. Image number 1 shows how the market will react at support and resistance. All right, so you guys just see that here we're acting as resistance, support, resistance, resistance, support, resistance, and then it breaks out, turns it into resistance over there. Image shows the same thing but with detail. All right, as long as the market is below the roof, this will be the resistance over here. All right, as long as the market is above the floor, this will be your support area. Okay, now take a look at this point here. At this point, it is no longer support as it was before. The market has broken out and retested, turning it into a new resistance. All right. Image number 3 illustrates how to draw your support as a zone. All right. We said close of candle line plus wick support line. All right, will give you a zone. Look how perfectly, if you had drawn this 1, 2, look how perfectly it matched over here. This is why we don't take any trades inside our zones, because these are wicks. So if you see how I draw my past analysis, you will see that if I have a zones, I prefer not to take any trades in that area. I wait for my candlesticks to close above as a reversal candlestick, then I buy, or I wait for my candlestick to close below and create a reversal candlestick, and then that will introduce my sells. All right. Image number 4 shows an example of US 30 trade based on support and resistance zone. All right. We've got our resistance over there. We've got our support area over here. All right. Here you can see that price broke above. Sorry. Here you can see that price broke the support area impulsively. All right. And then we retested, thus turning it into resistance. We retested over here. All right. So someone might ask me, okay, how come this candle you're not going to buy? You're not going to buy because number 1, it is inside your support zone. Number 1. Number 2, it did not close above the support. So I cannot buy from there. All right. Now what happens with the next candlestick? This candlestick creates a rejection candlestick, creates a reversal candlestick, and then what do? Enter over there, your stop loss above there, and then you go with it. All right. And because it was now resistance, it now shoots down looking for a new support area. Okay, I hope that makes sense. Example number 2 shows us gold creating a support zone with 3 touches before we decide to enter the trade. 1, 2, 3 before we deciding to enter the trade over there. All right, image number 2 shows us the trade progressing on a support-based entry. Okay, we waited for a bullish candlestick over here, entered the market after that candlestick, we're going up. All right, here we impulsed, created a continuation pattern. After creating the continuation pattern, the market tapped back in for a touch on the support area, and then we started pushing to the upside. So we wanted to see some buys from there anyway. All right, so let's make an example. Just in case you had used this as your high, all right, if you had used this as your high, and then the market came 1, 2, 3 times and entered over there, your stop loss would have been over here. So you would have been taken out. All right. The market is not always going to give you perfect entries. Remember that. Now, because we know that we've got 1 touch here, 2 touches there, 3 touches there, if this is a continuation pattern and the market faked out over here, we were looking to come back into this support area to enter our trade over here. So you could have entered your trade over there. If you wanted, you would have waited for the market to come back this broken high, all right, trade back into that area and then take your trade from there. Either or would have been perfect. All right, so take a look at what happened here. Shows us, illustrates the drawing of an additional support or resistance. All right, so once the market broke above what would have been your second entry, you can see that we've got a resistance there, support here, resistance there, support, 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 and then you can see that the market reacted in this area here. So if you've done lesson number 3, where we talk about a ranging market, you see that this is a range. All right, so the market built up on a 15-minute time frame, so quite a bit. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candles, and then we shot to the upside. Okay, let's carry on. Okay, so this concludes our lesson on support and resistance. Summary of the notes. Okay, resistance can be referred to as the ceiling or the roof. Support can be referred to the floor. For us to have a valid breakout, a candlestick has to close below the support or above the resistance. Okay, wick line plus close of candles equals zone. A zone is an area of sensitivity that is based on past reactions. When a resistance is broken and a candlestick closes above, we can call this a breakout and start looking for buys as long as your bigger time frames are signaling the same thing. When a support is broken and a candlestick closes below, we can call this a breakout and start looking for sells as long as your bigger time frames are signaling the same thing, as shown above on image number 4 on US30. So if you go back to US30 quickly, all right, you would have waited for this candlestick here to close below, waited for the retest, waited for a reversal candlestick, and then boom. This is a 30-minute time frame. So if you wanted to go on a smaller time frame and assess this retest into this area, that would have been perfectly fine. You can do that as well. I hope this explains support and resistance to you guys. Just remember that your close of candle and your wick line creates a zone, and in those zones you don't want to be entering any trades. So you can go and practice this and see how the market has reacted based on past trades or past charts, and see how you can use it in the future for your trading. I hope you guys enjoyed this video, and I hope you guys learned something. I'll see you on the next video.